Some think this young woman's small tailor shop only works with cloth and thread. Little do they know, something greater is quietly being pieced together.
Thank you. Kongsi. Bye-bye.
Girls, let's pack.
Boss, actually there's another job.
What? How can we finish it in time? Who is it for?
Oh, my best friend.
Boleh je. You go now and enjoy your reunion dinner. Go.
Go. You can come back tomorrow.
Silap-silap kita ni orang yang last kali rushing for Chinese New Year.
At least you got salary and job, ma. No complain, lor.
Less talking. Faster finish this lah. And don't forget, once this is done, we still need a design that can represent all of us, you know. We can make it, right? It's Chinese New Year, you know. This is so heavy and muddy. Why do you always pick the lotus?
I remember when I was a young girl, my mom told me that the lotus is a lot like women. Kak Aini, Maru, Amay.
Right, morning everyone. Welcome back to Morning Kappa at 8. Aiman here. Okay, so looking at the S&P 500, well, it finished significantly lower on Monday's session, dropping over 1% to close near somewhere around 6,837 points. The market tumbled as the investors were spooked by the Trump's sudden announcement of the 10 to 15% global tariff, combined with the fresh report warning that the massive AI adoption might actually hurt the broader economy as well. So, to me, I think for the Wall Street, expect a cautious and also volatile opening for today's session, as traders remain defensive while waiting for more clarity, right, on the trade war, as well as the Nvidia's earnings report later this week, right? So if you look at the US trading stocks that we have published yesterday, right, we got GE Aerospace. So the stock is experiencing a breakout at this $330 level. Now we can expect the stock to travel to its $360 level on a strong momentum, followed by the next resistance is at $380 level. Now, if the counter reverse lower, do watch our 325 level for the immediate support, as it could indicate an initial trend reversal signal. Also next we have Occidental Petroleum, stock OXY. So if you look at the charts now, the counter charted higher high market structure forming a higher low formation or pattern, right, to test this $52 level. So if the stock climb up higher, right, we could see that it might travel towards $55 level together with 58 level for the next resistance. So if the stock slide lower below this $49 level, this might signals a shift to a bearish structure. So we have one breakout stocks and also one pending breakout stocks for the US market, right? Right. So as for the China A50 future as well, it finished higher on Monday session, climbing somewhere around 1.1% yesterday, right, to close at somewhere around 14,886 points. So yeah, the market traded quite optimistically, right, because the recent US Supreme Court ruling to strike down the targeted tariff, which means the overall tariff burden on Chinese exports is actually expected to drop. Um, to I mean, as well as to provide massive relief to the region despite the new global um blanket tariff. So I think we expect a resilient but cautious movement, right, in today's session as investors balance this positive domestic trade news against the losses in the overnight uh, Wall Street. So I think technically, if you see here, the support of 14,700 points level remains strong, or I would call this as a key level, as the index is likely able to rebound further from this level, right? So moving on to the WTI crude oil futures, well, it finished slightly lower on Monday session, slipping around 0.1 percent to close somewhere at $66.30 per barrel. Though it largely moved sideways throughout the day, right? I think so. The market was caught in the tug of war I mean, because of the war premium from the escalating geopolitical tension, and also the potential military strikes was offset by the demand fears after US President Trump suddenly hiked the tariff. So I think we do expect a choppy and also volatile opening in today's session as trader continue to weigh on this Middle East supply race against the threat of slowing down global economy, right? So I think at this point we still view it as WTI positively, and make our position unchanged for WTI, right? Still holding strong to propel higher towards 68 uh, dollar level, and also $70 level after it rebounded from the 62 dollar level, right? Into Malaysia market now, if you see the KLCI and also FKLI, right, well, both finished higher on Monday with the benchmark index gaining somewhere around 0.29% to close at 1757.98 points. So the market is trading positive, optimistic, right, as investors cheered the Supreme Court decision to revoke the emergency tariff, easing the export fears, while the surging ringgit also hitting to 8 years high, right? Which attracted a strong buying interest into those blue chip stocks. So I think for our market, expect a firm but cautious opening into today's session, throughout the session, right? As the market digests these gains while waiting for the fresh global catalyst, right? So for the FKR traders, we maintain our positive trading bias despite the marginal move yesterday, as we believe that the positive sentiment will follow through into today's session, as we see that the potential continuation pattern to happen, and likely to charge higher to test our first resistance at 1790 points. So I think this upward upward movement was largely fueled by the improving global sentiment on the US Supreme Courts as well, which provided relief to our export-oriented sector. So I think in terms of heavyweight as a whole, right? So we saw strong support from Nestle, IHH, some Nabi as well, which if you see here, IHH jumped somewhere around 1.81%. So I think on the actively list, Astro and also Zetrix led the trading volume, even though their prices saw some dip, right? Yeah, the overall market now, I think the market breadth was positive as of yesterday, and the gainers are pacing the losers, signaling a steady recovery as we head into the corporate earnings season, right? So if you look here, in terms of day-to-day sectoral performance, you can see tech and also healthcare garnered attention yesterday. I mean, into yesterday's session. So I think during this earnings season, right, market are still volatile, and also I think any gains are seen as a broad base. So we prepared some names in our watch list for you to take a look at across different sectors. Right, also worth highlighting Eco Shop counters here, which shows a positive move from yesterday's session, gain up by over 3%. So I think the overall movement is still bullish. Now the price has crossed above the 21-day SMA lines. And not to forget that the indicator of RSI is showing a positive move, crossing above this 50% marks. Now, also, if you see here, the MACD line is likely to cross above the signal line, showing a potential continuation of trend moving forward. So, and also, I do notice that a possible pattern of cup and handle about to happen. And if the price to lift up, I think the immediate resistance is seen at 1 ringgit and 65 cent, followed by 1 ringgit and 75 cent. For now, I think the support remains strong at 1 ringgit and 55 cent, together with 1 ringgit and 45 cent level. Right, for our Malaysia trading stocks, we have Great Technology once again today. So the stock is on its breakout formation, higher at 1 ringgit and 95 cent level on a strong volume. So with that, we expect the bullish momentum to keep strong, and the stock able to propel higher towards the next resistance at 2 ringgit and 5 cent, followed by 2 ringgit and 15 cent level. So if the stock to clear this 1 ringgit and 85 cent support, this could reverse the course and shift the stock, shift the trend to bearish structure. Right. Also, next we have HSS Engineering. So the stock is on its pending breakout formation at the 43 cent level. So if the stock remain bullish, we expect the price to reach higher at 46 cent level in the coming session. Second resistance is at 49 cent level, and also do keep an eye at the 40 cent level for any attempt of reversal. So again, for Malaysia trading stocks, we have one breakout stocks and also one pending breakout stocks, which is HSS Engineers. Okay, so and lastly for the FCPO, well, it finished slightly lower on Monday session, dipping roughly around 0.2% yesterday to close somewhere around 408.4084 ringgit per ton, right? So I think the market traded sideways with negative bias because the Fed export estimates, and a stronger ringgit, which made the palm oil more expensive for the buyers. So I think expect a choppy to negative range bound opening in today's session, as traders would likely to stay cautious while waiting for fresh export figures for the first 25 days of the month, which is tomorrow. So we still keep our negative trading bias unchanged, eyeing for the 4,000 psychological level, and also 3,850 ringgit level. So I'll stop here and pass the floor to the next presenter. Thanks everyone and happy trading.
Hi, good morning, everyone. Thanks, Aiman. I'll continue with Kossan's results review. We are maintaining our neutral call here, but with a slightly higher target price of 115 cents from 114 cents previously. So in terms of the 2025 core earnings, actually came in, slightly higher than expected, mainly on stronger than expected sales volume, lifting utilization as well as margins, as well as a lower effective tax rate. So in terms of fourth quarter numbers, it's the core net profit is at 42.1 million, which is up 31% Q on Q and 78% year on year. That actually brings the 2025 earnings up to 130 million, which is 34% up year on year. And again, results were above expectations at 109% of our 2025 forecast. But this is broadly within the consensus at 98%. And the key division here is mainly on the fourth quarter numbers, where they actually recorded better than expected margins, as well as the lower than expected effective tax rate, which is actually a refund in the fourth quarter. In terms of results overview, fourth quarter 2025 revenue was stable, up 0.1% quarter on quarter, despite a stronger ringgit. Operating margin-wise, it's at 10.2%, which is marginally down by 0.1 percentage points Q on Q. Quite stable. This is supported by lower production costs arising from improved operational efficiencies in the glove division, right? We also note that the glove unit currently registered a higher PBT margin of 10.3%, versus the historically higher value contributors such as your technical rubber, which in this quarter they only did 8.3% PBT margins due to lower deliveries, while the clean room division did 9.8% PBT, due to higher mix of lower margin products. In terms of ASP and volumes, they were not disclosed in this quarterly commentaries, but we estimate that the quarterly sales of 4.4 billion gloves, which implies a utilization of around 71%. And we think that the blended ASP is largely stable quarter on quarter, with the higher volumes actually offsetting the FX headwinds. Meanwhile, in the fourth quarter of 2025, there is shipment deferments of about 35.6 million ringgit to January of 2026 due to port congestion. In terms of our earnings adjustment, we are revising our FY 26-27 earnings downwards by 12%, 8%. This is mainly to account for the updated FX assumptions, and also following updated full year numbers, as well as some of the key assumptions. But our TP revision actually reflects a technical adjustment rather than a fundamental change in view. Previously, we omitted a sizable portion of Kossan's money market placement from our DCF, and after incorporating this back, the cash position actually leaves the equity value, which more than offset the downwards earnings revision. And that's it. As a result, our DCF derived TP ticks up to 115 cents, implying a 0.77 times 2026 price to book value, which actually is at 1.2 standard deviation below its 3-year historical average. We are maintaining our neutral call. We do see Kossan's valuation as fair. Operational efficiencies remain robust, and they did consistently deliver, which continues to underpin our view. That said, while its diversified portfolio historically supported earnings resilient, I think margin trends in non-glove segments, again, these are higher value contributors, now actually lacks the glove division. So The balance sheet wise is still strong. They do have 1.6 billion net cash remaining at the end of 2025, which translates to about 62 cents per share. That's all from me. I'll pass on to the next presenter. Thank you.
Hi, morning everyone. Thank you, Eddy. I'll move on to Sport Toto second quarter result, which was announced yesterday. So Sport Toto first half core earnings came in below expectations, down 26% year-on-year to 67 million, representing 37 and 36.6% of our and consensus full year estimate. The negative deviation was mainly due to a wider loss from the UK car dealership business as a result of higher employment costs associated with the newly implemented UK labour regulations. But despite the softer earnings, Sport Toto declared a second interim dividend per share of 3 cents, with 5 cents year to date, which is within our expectation. In terms of top line, Sport Toto reported second quarter revenue of 1.5 billion, down 1.4% Q-on-Q and flat year-on-year, bringing the first half number to 3 billion, up 1.6% year-on-year. The first half year-on-year improvement was mainly due to an additional draw, 82 draws versus 81 draws as compared to last year, while the sales per draw were flattish. But the second quarter core earnings came in at 45 million, up 104% Q-on-Q, but down 9.2% year-on-year. The strong Q-on-Q rebound was mainly driven by a normalization following the elevated price payout ratio of 63.4%, which was recorded in the first quarter this year. However, on a year-on-year basis, the earnings were weighed down by wider losses from the UK side due to a higher operating cost. And moving forward, we see the illegal number for car operators continue to be a key challenge to legal operators, given the easy access through their digital platform, which the regulated market cannot fully match. And meanwhile, we see the NFO segment continue to struggle with low engagement from the younger generation. And at the same time, margins from the car dealership business, the UK side, are likely to remain subdued and weighed down by elevated operating costs. So overall, after all, we cut our earnings forecast by 8.1%, 1.5%, and 2.8% for the next three forecast year, and downgrade to a neutral after imputed a lower margin from the UK car dealership business. Our TP is lower to 1.48 from 1.55, with a 2% ESG premium incorporated. Overall, we see Sport Toto remains a defensive yield play with the lack of near-term catalyst. And well, I think that's all from our side today, and thanks for your time. Happy trading, and I'll see you again at Morning Kappa tomorrow at